if you look at it, what's good about these three industries that I've really specialized in is there's always a need. They're relatively recession proof. And so not to make it so that it's idiot proof, but the nice thing is if you look at sports, the sports asset class has outperformed the market for the last 60 years in a row. If you look at real estate, obviously there's inflection points big time. We've all lived through 2008, 2020, but there's also this ability where people need a place to live. And there's always an opportunity to see gains on the real estate side. And in medicine, people are always going to be sick. People are always going to get hurt. So if you empower the physicians and if you work alongside the physicians the right way, it's very scalable.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Today's guest is Nick Edwards, a venture capitalist and entrepreneur managing over $1 billion in assets. From flipping medical buildings into a REIT, a real estate investment trust, to working with pro athletes and elite teams like the Denver Nuggets. Nick combines his background as a former MMA athlete with deep expertise in health tech, real estate, and sports. Nick co-founded Champion Venture Partners to make ownership more accessible while balancing purpose and profit in investments. In this episode, he'll share his journey, key investment strategies, and the secrets for sustainable growth. Let's dive in. Hello. The time has come. Nick is here. Welcome to the show, man. How does it feel to be Nick today?
Feels pretty good. Thanks for having me, Brett.
Man, absolutely. Feels really good. Where are you at right now?
So I'm based in Denver. So we're got gorgeous sunshine and no snow, at least in the future for a little bit, but hopefully in the high country.
Yes, we're recording this just before Thanksgiving here. So happy Thanksgiving. And it's not snowing yet. Is it usually snowing by now?
You know, it's so funny. People think that Denver's a really snowy spot, but we're a desert climate. So I literally have cactus in my yard. And so you can see the snow coming in the high country. And we'll get tons of snow in the mountains, but here in Denver, you know, you get an inch of snow on the ground, people lose their minds. It's very different for them.
That is crazy. Yeah, from the east side of the states, I'm in Carolinas. I just think of Denver, I think of snow. So it doesn't relate that you have a cactus in your yard. That's crazy.
Yeah.
Hey, let's get started by letting the listeners know just a little bit about you. So get to know you a little bit better and tell us about your journey from professional MMA athlete to venture capitalist. What a spread.
It's a big spread, but you know, I've been blessed enough to have people open up doors for me, and I guess I've had just the smarts enough to walk through them at the right time. And so it actually kind of overlays perfectly with kind of my past. So for me, like you said, I was an athlete. MMA had a great successful career there, but I knew I couldn't, frankly, get punched in the face my entire career. It's not a sustainable, life choice. So you have to transition out of sport. And so for me, I'm a physiologist by trade. So I went from MMA to then working with NFL, NHL teams right out of the gate in physiology and trying to give back to those in sport. And interestingly enough, when I was there, it was that connection point between what I experienced being a professional athlete as well as then working with pro athletes, all the cool things that everybody gets to work with when you're at that level. But the general population just doesn't see it and they're not aware of it. So I really got set on this path of commercialization of how do we expand intellectual property, get it out to the masses? How do we scale this? How do we, work to basically take things and bring it to the general populace? And so from there, as team physiologists, I started working a lot with orthopedic surgeons, family practice physicians, and started to kind of grow. I formed different SPVs, helped them on clinical workflows that kind of dovetailed into sports medicine, all the way to then taking myself into the founder seat where I tell everybody I've had a successful exit and I've also had to BK a company. And so when you have both ends of the spectrum, you have a really good, clear picture where, I will say there's a lot of charlatans out there who will say, hey, I exited one company and I got $200 million from it. Follow me for the insights. It's like, no, I don't need your winning lotto ticket numbers, man. You want to be battle tested and see exactly how things work on the good and the bad end of the spectrum. And so although it was very trying during that time, blessed to have that experience and kind of come through the other side of it. After forming different SPVs, I worked with physicians to help them open up large clinics, acquire clinics, flip into a REIT. Everything that I touched has really been in the sports, the medical, or the hospitality and real estate lanes. And so continuing on that path, I then became an LP in different funds, an angel investor, to ultimately being an investor myself and being in the VC game.
That's amazing. And, you kind of went from, I'm sorry if you probably get all kinds of puns coming from the MMA world. I did this, but that you mentioned about you couldn't get punched in the face the rest of your life. And, it makes me think, you traded literally getting punched. By now you still get punched in the face, but it's from a business perspective, from a team building perspective, from all of these challenges of being an investor and entrepreneur. So it's still happening. There's just a little trade-off. And I love what you said there too, Nick, about that one exit or that one, because we see this a lot in mentors and coaches. We need these things. We need to invest in ourselves, expand our associations, but we just have to watch what's being glamorized, if that's a word, on social media and the marketing of what people want you to see. You really need those times of, hey, what was full cycle when times were good? Yes, but what was full cycle when times were bad? What were your challenges? What'd you learn from it? So making sure that you're knowing who you're taking advice from is really important. You mentioned SPV. What is that?
So that's a special purpose vehicle. That is a specific investment entity to be placed in a one-off investment. So that could be multiple people coming together for a building, a multifamily housing unit, a physician clinic, all the way to a specific investment in an early stage company.
Interesting. SPV. So I've heard of MVP, minimal viable product, when we're developing something. So SPV is very interesting to add there too. So you've diversified investments across health tech, real estate, and sports. How do you identify sectors with high potential and sustainable growth?
It's a great question. If you look at it, what's good about these three industries that I've really specialized in is there's always a need. They're relatively recession proof. And so, not to make it so that it's idiot proof, but the nice thing is if you look at sports, the sports asset class has outperformed the market for the last 60 years in a row. If you look at real estate, obviously there's inflection points big time. We've all lived through 2008, 2020, but there's also this ability where people need a place to live. And there's always an opportunity to see gains on the real estate side. And in medicine, people are always going to be sick. People are always going to get hurt. So if you empower the physicians and if you work alongside the physicians the right way, it's very scalable.
Very interesting. In need. So finding these areas that are in need. And you mentioned, working alongside physicians. I always mention this throughout our lives. We stretch out our experiences. Like if you stretch them out on a timeline, and then when we start stacking our experiences, they're very unique to us. So you mentioned about working with physicians in your path, your journey, physiology, the MMA. So you're stacking these experiences. There's only one Nick Edwards. And there's only been one person that's experienced the same things that you have. And same with the listeners as a physician, as they stack the things they like. So taking these opportunities to create these relationships and investments where, hey, there's nobody else that's stacked these experiences just like you. So that's a very unique way of doing it. And it's so cool to think, if you had ever lined this up, Nick, and say, hey, this is what Nick's going to do in his life, would you ever have imagined that it would have stacked these things together like this?
Oh, never in a million years. I mean, I was totally the kid that was a college football athlete where I thought I was going to go play pro. And I mean, I'm like 6 foot with cleats on 205. So, I mean, I am not a big dude by any means. So,
Yeah.
Of course, you could have told me that in college, that I wasn't going to play in the league. And so, luckily I had enough talent in the athletic side to go into MMA, but you don't know where things are going to go. You just have to be able to identify those doors and be able to walk through them. And like I said, I've had great people in my life that have opened doors for me. And I think the resounding theme is just do good things and the money will follow. And it's not necessarily
absolutely.
do good things for the ecosystem. It's just doing right by others. And if you're constantly trying to find and increase the betterment of others and what they're doing in their career, there's obviously inflection points that help them, and your career can grow too.
Yeah. And when we're stacking these experiences, kind of like reaching out and diversifying our investments, what are some key principles or strategies for balancing the risk alongside of those strong returns?
That's a great question. I will tell you, for me, I have found my specialty at the growth inflection points and really identifying where folks are in need based on that growth curve. So, you can get in very early into ecosystems very early into startups, and it's very high risk. You can get in much later, and there's much lower upside, but it's much more stable. It depends on your risk tolerance and where you want to go. For me, it's interesting. Working with pro athletes and working with physicians is really kind of a mirror. Because if you look at a pro athlete, they sign a contract, they have a good payout, they're an accredited investor, everybody starts to pitch them on ideas. Same thing, a lot of my friends that are orthopedic surgeons, as soon as they started in private practice doing things, everybody came to them for investments. And to sort that out and really see which ones are the ones that are going to work versus your best friend's cousin starting an AI company that's going to change healthcare and it's still in his basement, it's never going to get off the ground. But
and he's not a physician.
Yeah, that's what people are exposed to, right? Like they're exposed to these high risk deals, but it's more so forming that network and finding the opportunities for the growth stage. And by growth stage, I really mean it's acquiring another physician practice. It's acquiring a competitor. It is you're outgrowing your building, so you need to buy a new one, right? So in those inflection points are where you need to find different investment opportunities for others in that industry or find smart investment opportunities to maximize your own dollar. And so that's really where I've concentrated a lot of my efforts, and it's been successful so far.
Mm-hmm. And to me, I'm so visual. Like, so when you say growth inflection points, are there any KPIs that you can literally graph in order to see, hey, this is literally overnight still in his basement to where, hey, this is your overnight success where they've put years and years and years in, and we're at the top of that curve. What kind of KPIs, or is there a graph any data that you would look at to see this growth inflection point?
You could graph it out, but the hard thing is it's really hard to graph it out in the moment. It's one of those, oh yeah, of course, aha, in retrospect, you can see it, right? Prior to that, what you need to do is you need to really look at the process of the vertical that you're investing in and really the functionality of where is going to make that inflection point happen. So for instance, it could be something as, let's say in a physician office, it could be they're hemorrhaging in clinical workflow. They can't get any more patients in because they've just physically outgrown the number of beds that they have, right? You can see it on the other side of an early stage sports startup who is selling sports equipment. And they need to buy more for the holiday push because they just can't possibly keep any more inventory on hand on the shelves. They need to pre-buy it ahead of time. Or last, it could be something where there's a company out there in the tech space where they need to acquire a competitor so they can get the market advantage and then be there for some of the larger players for an M&A transaction. And so it all comes down to revenue and process flow. And once you see those inflection points happen, so it's monitoring the data constantly and being in touch with people who are monitoring that data to know when to plug in and deploy resources.
Very interesting. I could go into a whole nother show topic on that particular piece right there. But having that in mind, I do want to take this and make sure that we're focusing on real estate as well too. And I've noticed you've been involved in flipping medical buildings into a REIT, a real estate investment trust. Can you walk us through that process and what's exciting about that opportunity?
What's nice about it is liquidity points. I think if, physicians are going to go in there and they're looking to own their practice and they're owning the building within, it's kind of I don't mean this in a condescending way, but it's a McDonald's model, right? If you own the real estate and you own the operations within it, it's far more fruitful. And so the process of flipping it honestly was not as difficult as it sounds. But the reality is it takes time. It takes time. It takes thought process of how and when you want to have an exit. So I would say this for anybody who's looking at that and trying to grow into that area, making sure that when you set up your cap table, set up your initial capital coming in, that you're stacking it in such a way that you're thinking of your exit in mind. If this is if this is a physician who wants to practice for the next 20 years, great. You know your time horizon of where you're going to be, and maybe you could sell prior to that. If you know that this is a physician group who wants to probably sell to a PE group or a local hospital in the next 5 years, stack the same thing for your real estate in that direction.
Interesting. I want to mention too a little bit about Champion Venture Partners. Can you tell us just a brief introduction of what that is, and we'll go from there. Yeah,
Champion Venture Partners is where I'm at today, and it sounds weird to say, but it's kind of the culmination of everything that I've worked on in my past. So at CVP, it formed with two partners of mine, a gentleman named Jeff McDermott, who has a past history with working within funds and also teaching emerging managers how to become fiduciaries and run venture capital funds. My other partner, Marcus Colston, he played in the NFL for the New Orleans Saints for, I think, just over 10 years. Marcus and I met, we'll call it pre-COVID buddies. I actually probably need to track it back to the exact date. But we met over a sports tech company. And from there, we really started designing and talking about the lack of meaningful ownership for athletes in sports. And what's funny, I think about the same thing as physicians. It's the same thing of owning in what you're practicing, right? If you look at the majority of physicians practicing out there, they're not owning in their own private practice. So if you look at kind of the entire trajectory, you really started to say, all right, how are we going to make meaningful ownership in sport for athletes? As we were designing, we said, we don't want to do a traditional venture capital fund that's a 2 and 20 model where it's 2% interest, 20% carry. We didn't want to tax our investors that way. We wanted to be equally yoked with our investors and put our money to work. So the natural segue to that then was to create a holding company versus a true fund. Out of that holding company, we own an RIA and we own a management company. Those two things create revenue for us to turn around and invest in what we have actually made called an interval fund, which is a first of its kind sports asset class fund where retail investors can invest alongside the biggest names in sports. So the great thing about this is you don't have to be an ultra high net worth individual to own and part of the sports assets. You can own with literally $500 coming in. So the great thing about this is we've opened up the sports asset class, but we invest across the entire sports asset chain. So what I mean by that is we're looking at the stadiums. We're looking at the short-term rental facilities around that. We're looking at the offices around it. We're looking at the medical teams that are providing to the teams. CPG products, sports tech, the entire thing that really constitutes what sports asset is, not just like owning an NFL team. Everybody thinks of that right away. It's literally all the great stuff connected to it.
That's amazing. And I was going to ask, how does that CVP support the game-changing innovations established in sectors like real estate and sports? Well, you just broke it down. To me, it sounds like it's a fund where if I step back and I look at this at a high level, it's all of the things that are around the actual sports event, the place where it happens, the place where people stay, other things produced byproducts of those events. And by simplifying this in a way where you step back and to me, it sounds like the fund where it's something more, it's more tangible for, investors like me who have no idea. I can tell you're super experienced coming through this journey. I've met very few professional athletes. I don't know the challenges or the opportunities that are there, but this process makes it easy for me or the medical professional just say, hey, do you want to invest in stuff like this? And this is why it makes sense.
That's exactly right. We really wanted to create a ubiquitous vehicle so that people that aren't operators in sport can invest in sports, right? And sign the sports adjacencies. Everybody, when they talk about sports investing, they think, oh, I can't write a check to play in an NFL team. Well, literally, there's only a handful of people who can. Let's just call a spade, right? But the reality is the sports asset class is a $3 trillion industry where just a sliver of it is the teams. The rest of it is, as you were saying, it's what's the technology that's doing ticketing? Who's the in-seat food and bev distributor? What are the food and bev rights for a stadium? What's happening with the short-term rentals around the stadium? How about the restaurants that are next door to that? All of that is the sports asset class. And so you don't have to be an expert in sports asset to invest in it. What you need to do, and this is actually kind of a general statement all around if somebody is looking to invest in a fund, I think the days of the 2 and 20 venture capital pray and spray model are over. I truly believe that. What you're going to see now is more and more of the emerging managers and the people who are industry-specific experts, and they're operators in that industry. So, for instance, our team, we have folks who worked in the back office in the MLS. We have somebody on the sports tech side who literally created Amazon Alexa while at Amazon. So we have a team that's built that knows the business of sport. And anybody who's investing in a vehicle like ours or anybody in general should really look at the team, not as far as what is their track record for investments, but really what is their operational expertise in that industry and can they pull off the returns that you need? So somebody doesn't need to be the expert in sport to be able to invest in it. Same thing, a physician doesn't need to just have knowledge of medicine, so that's the only thing they invest in. Same thing for somebody who's a former real estate agent. They don't just have to get into multifamily housing units. They can diversify their investments by their network and the people who are operational experts around them.
And this creating this opportunity for others to invest in the sports asset class. And there's so much more that involves, like you're saying, Building the team is so important because it instantly reminds me, think about diversifying and going outside your comfort zone when it comes to investing. It reminds me of a story in a little book called The Richest Man in Babylon. And there's a story inside of there where the person, the main character, had given his son so much money, and he had 10 years and he had to come back before the father would give the son the inheritance. He had to come back in 10 years with this money and have grown it. Well, unfortunately, he had given it to somebody that he shouldn't, that didn't know what he was doing. He knew that something was going to be happening, but he just didn't have what it took to take that idea, implement it, and grow from it. So in order for us to get to the point where we are, you said you don't have to know everything about being a professional athlete to invest in this sports asset class, but you have to have the right team in order to do it. So to get there, that's exactly what you started explaining with your team and the way that you've leveraged relationships, whether it's the MLS back office, these front side, the Amazon Alexa piece, that you have built this team to get there. And you've also worked with teams, right? You've worked with teams like the Denver Nuggets, the Colorado Avalanche. What lessons have you learned about leadership and culture from these experiences that you now translate to business?
Taking it as an athlete, the locker room culture is key. I think one thing that's important is that we all come from different backgrounds and we all add a piece of the puzzle. If you're in a locker room and you're an NFL team, the quarterback can't also catch the passes. The quarterback can't also play defense and be a cornerback. You need to have people that specialize in everything. So as you're assembling this, you need to have the right players put together that are unified and aiming towards one singular North Star. And that one singular North Star allows you to win. So again, it doesn't matter what industry it is. I'm clearly using a sports analogy, but I've seen it when I was team physiologist for the Avalanche, for the Nuggets. Working with those teams, we've obviously have had some championships in the past couple of years. It's because we're united to one North Star and pushing, and everybody's leveraging their own operational expertise. And that's the same thing for what we do in our fund and in other things in business, is making sure that you're bringing in those complementing parts to get to that point.
It's interesting. So when you say locker room culture, it's about the piece of many parts focused on one goal. Is that what you mean?
That's exactly right.
Hey man, that's in the Bible too. That's in the Bible. It's spelled out. I can't recall it perfectly, but it's about, there are pieces of the church that we all have separate members, like our bodies. There's separate pieces to our bodies, but when there's a unified vision, that body can do tremendous things. So that goes way back, man. That goes way back for sure.
Exactly right.
How do you foster these high performance culture ideas within the companies you invest in? So when you invest in a company and you're coming from, and I've heard the locker room, some of my colleagues that have just crushed it. Basically, there's been something to do with the sports world, and then they take that and they convert it into business. But how do you maintain or foster that high performance culture within the companies you invest in?
Ooh, that's extremely difficult. I think the number one thing is just leading by example. And I think people get trapped in this kind of rat race of saying, oh, this is your work family. No, it's not. It's not your family. Your family's above all else. This is work. And that's why I use locker room, is because at the end of the day, we know what happens if a team, a head coach, a quarterback, a wide receiver isn't performing. They get cut. They're cut that day. They're cut Monday morning after a bad Sunday game, right? So it's the same thing. When you're looking at everything from the portfolio companies we invest in, is leading by example and empowering them to know you can have good eggs and bad eggs on your team, uplift their strengths, and if they're a bad egg, you got to cut it quick. Cut it quick and get the right people in there.
Leading by example, and I've learned so much. Nick, do you have any children?
I do. I got two. I got a 9-year-old daughter and a 6-year-old son.
Wow, congratulations, man. That's so amazing. That's like the greatest gift that I've been blessed with in my life. And I've learned so much to grow personally through this. And when you mentioned leading by example, it makes me think of that. It's caught, not taught. And leading from the front, you've heard it that way before. And also that idea, when something's wrong, you got to cut it. It's like a cancer and it's just horrible. If you have somebody in that locker room who is either talking bad about a coach or a teammate, it has to be addressed. It's cancer. So leading from the front, leading by example, everything is caught, not taught. I think we can't change these companies per se when we're investing in them. But if we're working with leadership and we are leading by example, it's a great way of setting an example.
That's right.
Champion Venture Partners emphasizes balancing financial returns with social impact. Can you share examples of how this approach has worked in your investments?
Yes. So, everything we do, we want to make sure that we're giving back to local community too. So we're very hyper local and hyper focused on everything that we invest in. And the reason why I say that is because we interconnect our portfolio. So let's say we invest in an emerging league and team. Then we want to look at the stadium around, and I've kind of said this already. And then we want to look at, what's happening in the ecosystem around there. We will look at how can we give back to the local community because part of our cap table, we have a nonprofit involved as well called X. We're able to give back to our local communities through that nonprofit by way of the returns and things we generate. But then also on top of that, we look for ways to kind of plant our portfolio companies. So let's say we have an equipment company. We want to find a way to get back to like some of that sports equipment to underserved, underprivileged children that are in that area. That not only helps elevate our brand, but it's doing right by others. So it's an absolute win-win all around.
That's awesome. Stop selling and start helping. And that way of interconnecting and giving you the opportunity to then be intentional and giving back. And that's awesome. And you did mention Bison X, and we talked about that briefly, but that's just that before we started recording, but that's that way of intentionally giving back. And again, leading from the front, Nick, it just sounds so amazing that you are intentionally, you're giving this attention from the get-go and able to mix that purpose and profit along the way. What advice would you give entrepreneurs looking to integrate purpose and profit into their business?
Number one is identify a North Star. You have to do it at the onset of the business. You have to make sure that it's there on the onset of your investment, the onset of whatever you're trying to do. I think people too often are like, ooh, I want to make a lot of money. Here's how I'm going to do it. Invest. No, you don't. That's not true. Money is a tool. It is a byproduct of doing the right thing. And it also is a tool for freedom, for financial freedom. It is not the end game. So you need to connect with your super why and whatever that North Star is for you. So for instance, mine is my family. And I want them to, in the future, want for nothing but have to earn everything, a desire to earn and a desire to get out there. And so that's my North Star that makes it so that I want to lead by example. I want to work hard so that my children see that, so that they have that same work ethic of earning it and working hard. Same thing now for anybody investing in business. If you just sure want returns, yeah, I can't help you there. But if you want to make returns by way of, I want to make returns in real estate because I want to pop up more affordable housing, awesome, let's talk about it. If you want to make returns inside of real estate because you have a passion for giving access to people on the ski slopes and housing lifties, great, there's a way to do that. So everything has to come back to a certain purpose. Otherwise, you're just shooting from the hip. And frankly, you'll never get long-term wealth.
Not in my line of questioning here, but when you mentioned North Star, picking out that why, you're definitely correct. Money is a tool. I also feel money can make you a tool if you're not careful. If you don't have that North Star, it is not the end game. I'm always so afraid, Nick, when I'm thinking, I don't know what my why is. How do I find that? I know I'm so passionate about my family and being, I'm a high performer, all of this stuff. I think that joy and happiness is where I want to be. And I think that's that ultimate end for me. What do you say for the medical professionals listening that may not be able to put their finger on their why? Their North Star. You
may not be able to put your finger on it right away, but over time you'll be able to. It's there's different ways that you can design it. I think the most popular one is probably the Japanese ikigai, where you're making the two graphic circles and finding the overlay of what you're good at and where you can create money. But the reality is it's fueling your passion to your super why. So I would say what links your passion, your desire to get up every day, and your long-term goal. And the more and more you think about those, and the more and more you can try and ask yourself the question of why. And this sounds corny, but literally the way that I have found my why is literally I'm lifting in the weight room. And it's that internal conversation between sets in my head of like, do I really care about this? No, I really don't. Do I care about this? Oh yeah, I actually do. And it's having those internal dialogues to find and sort through what's noise, because we get noise 24/7 in this world. And then literally listening to yourself as far as what your why is.
Do you listen to music in earbuds in the weight room, or do you listen to audiobooks? How do you quiet the world so you can hear yourself?
Yeah, I'm a music guy, and I don't know how it fosters my thought process, but it does. I'm either listening to hardcore rap or hardcore rock, one or the other.
Interesting. Do you sit in the sauna?
I do.
What now? I love the sauna, and there's a whole nother level of the self-realization and self-talk inside of the sauna. Do you experience that as well?
I do. And I mean, I do it all the way from cold plunge, sauna, steam room. Like I'm a full recovery guy. But I will tell you, a lot of people don't necessarily have access to that. And I'm not a proponent of, yeah, you got to go out there and get access to that. But it's more so, it's just that time, like in the sauna, you literally are just there with your own thoughts. You are sitting doing nothing. You don't have your phone in there because you don't want it to get obliterated by the heat. You're actually freeing yourself to be mentally present.
Yep. Yeah. And finding that just that time, that 15 minutes of just that daily, for me, prayer and meditation and shutting down the world and just listening. And we've been blessed with so much in our lives, but you just said it, there's so much noise happening everywhere else that we don't even get the chance to understand what we've been blessed with because there's so much other things going on. We can't even hear ourselves or hear God speaking to us in those moments. My belief.
It's a funny fact of the, dear God, please let my Instagram life look like my real life, right?
Yeah, right. Right. And the other thing about saunas too, and there's this point where we're, speaking to ourselves, you hear some of the dumbest conversations ever if you can't block that stuff out in saunas, in the ice plunge stuff, just because what our bodies are trying to do. Hey man, what are you doing to me? And then all of a sudden you just word vomit. And all this, your whole life story comes out. It's interesting.
That's right.
You're helping athletes and others traditionally excluded from ownership gain access to equity opportunities. Why is this mission important to you, and how do you make it happen?
That's our entire thesis. Is we wanted to have alts for all. We wanted to be able to provide alternative investments to everybody. They've been left out of the room. There's always been a solution for the ultra high net worth. There's always been a solution for the high net worth individuals. You can place in funds, you can place in the markets, but the retail investor really has been left out. And it's funny because people think it's because of naivety. They think they don't know what to do with the money. I've met some retail investors that are far smarter than some billionaires I know, far smarter. The reality is they just don't have access. And so for us, the alts for all really means providing access. And so that's where we are able to, and that's where we came up with launching the interval fund versus a typical fund structure. The interval fund structure allows retail investors to come in. You don't have to be a high net worth individual. You can literally put $500 on the table and you can watch that grow over time.
Interesting. Interval fund. And I did see something too, ultra high net worth. You do work with people who are ultra high net worth, is like the whole other end of the spectrum, but bringing that in through this fund, making it possible. You mentioned the interval fund, giving everybody the opportunity to do this. It's kind of like the secret in itself, not having access. Maybe here's the secret, the little revealing piece where you can, and it's not only this, Nick, the opportunity of being able to invest in this fund, but who are you surrounding yourself with? What conversations are you having? What kind of ideas are being discussed in this community that you create inside of the fund? As long as you're not a set it and forget it kind of person, because nobody's going to care more about your money than you do, and no matter what circle you're in. So you've got to do those. What's one metric that you believe every investor should monitor?
Ooh, that's a great question. I think there's on the nose monitoring of your shares, the growth on the net asset value of each share you have, you're growing your principal and kind of where things go. I think kind of a common mistake is people don't ask, what does deal flow look like? The quickest way that, in my opinion, is the death of a fund is that there's capital to deploy and people don't know where to deploy it, so they start to birdshot into risky deals, or they start to place it in things that don't work. So a question people should ask is, what does your deal flow look like? How are you getting to the top 1% of deals, and why should I put my money with you? So if you're asking, how do you get that deal flow? How are you staying on top of deal flow, staying on top of all the markets over and over? How do you stay advanced? That is what people should be asking.
It's amazing. What does your deal flow look like? Nick, hey, it's been incredible. For the listeners here today that want to learn more about you, your team, what you've got going on, how you're staying in front of that deal flow, and what your deal flow looks like, how can they reach out to you?
They can look at us on our website. There is an Invest Now, and there's also just an inquiry. If there are people who have a sports company that want to pitch, they can pitch us on our website as well. And then we have a pretty big LinkedIn presence, so you can find me on there as well.
So the championventurepartners.com, is that correct?
Yes, that's perfect.
championventurepartners.com. I'll put that in the description as well. And before we came on recording here, we were back and forth. Like I was literally challenged. How do you like that word? I'm creating new words all the time. Literally challenged trying to get this down. But I want to make sure everybody can clearly connect with you. This is so cool. And it's just like you said, the secret may be just that we don't know. Like we don't have access to this. We're not inside the NFL. We haven't been inside the cage with somebody swinging at us before. So we don't know this, but we know the opportunity that's out there on this idea, the fund that you've created and how that makes sense, and make sure that we have the right people inside to make sure that all of this happens. We're not just spraying and praying, or trying to hit that deal flow just by, hey, we've got money, where do we put it? We've got to have the right people on the team. Man, it's been absolutely wonderful speaking with you. And if there was one last secret that you could go back, say 10 years, somewhere around there, that secret that you feel like you have now, and maybe you're sitting beside a physician or somebody that was on a similar path as you in medicine, or the athletes who go into the specific kind of surgery that athletes go into as a doctor, what would you tell that person about the secret that you have now?
Don't choose your partners because of the deals. There will always be deals. There is never a deal out there that's like, this is the one time for my career, it's done. If you're putting that type of pressure on yourself, you will not be successful. You should be choosing your partners based on the deals that you want to have later on. Be very choosy about your partners, not the inverse.
Choosing your partners. And it's often where we look at this too. That's great advice. And it's almost like a marriage in a way. You're not going to... And these days, Nick, you might, with the television shows that are out there now, you might, 90 Day Fiance or something like that. But you don't want that to be in your investment world. I think that locker room mentality is huge. And even if you're not an athlete, you can understand that locker room mentality. And I kind of gave it that Bible analogy too, of we're all different members of the body. And if we're focused on that one North Star, it gives me goosebumps to even think what you can do with one simplified vision as a group of people. It is just amazing. When your goals align, when your values align, man, amplify that by not picking the wrong partner there. It's just so remarkable what can happen. And we can see this through your journey. So thank you for your time, your experience, and just extending this opportunity, this secret of the sports world into the real estate mogul world as well too. So thank you so much, Nick.
Thank you. Thank you for having me. This has been fantastic.
Perfect. The joy and the pleasure is all mine. I hope that the listeners out there today, you have enjoyed this as well too. And as always, thank you for your attention. With Nick's attention here today, just showing us the opportunities that are out there. It's not a secret anymore. We have the ability to expand our associations, learn from those who are already crushing what we want to do. We just got to find the right team. We've got to find the people that we want to be in the locker room with. The locker room mentality is not a bad thing. It's about us being focused on the same goal. And who do I want to go up to a battle with? That's who I want beside me. And who's going to stick with me? We're going to vet these people through good cycles, through bad cycles. When things are good, when things are bad, you think about the real friend is going to be there when they don't need anything from you. And today we got so much from Nick, and thank you so much for your time today listening here. This is the Real Estate Mogul MD.